Hey, Crypto family. So today I'm going to talk about Degen yield farms and how to stay away from the risky ones, what to do and what not to do to make a lot of money and to save your money. So with that, let's go ahead and get started. So with yield farming, you see it's been very big. Aave's been really big. It's got a liquidity protocol of $19 billion. You have Curve Finance that's been really big. It's got over $9 billion TVL. And a lot of other farms have been doing very, very well, but they're not providing a lot of returns. So for example, you'll get 5% APY, 10% APY, which again is not bad if you just want to hold stable coins. But a lot of people want those Degen yield farms that you see here providing 2,400% APR. You have here 2,200% APR. And while these may seem enticing, I'm going to show you what to do and how to avoid falling into these basically scams where you buy the farm trying to get that 100,000% APR and end up losing money. So one of the first things you want to do for these yield farms when looking for them is start following this guy here at Rug Steamer. It actually may be a female, but follow this person here at Rug Steamer, and these people, they audit basically all of these farms. Now again, they're not verified auditors, but they do pretty thorough audits of these different yield farms, and they actually have a calendar. But if you go to their website here, it's rugdoc.io, and it'll come up here to this page. Now they have their farms split up for Binance Smart Chain, Polygon, and then featuring your farm and color guide. So for featuring your farm, again, they do have sponsored farms, so just keep that in mind for those farms. But they have their farms filtered by risk, which actually I like a lot. So you can filter by risk, by least risk, low risk, some risk, high risk, not eligible. I recommend at least low risk at the most. So low risk or least risk. So you click those two and you can see all these different farms and what platform they're on. So you basically click on the farm and it'll tell you what it is. Goose Fork, deposit fees capped at 4%, LP pairs cannot be duplicated, no emission bugs, etc. So you can go to the Master Chef, basically see their contract, see what code they have in it, and then click more info. And it'll basically tell you more about the protocol, and then you can actually go to their website, clicking this link here, and it'll bring you to the farm's website. Now, a big thing I want to mention is, even if these farms do have low risk and you go to their website here, let's just go to one on here. So a lot of these farms actually do advertise high APRs. Okay, so right here you can see this one isn't too bad, 499% here. One thing you want to look out for is what their TVL is, and actually it doesn't seem like it shows what their TVL is, so how much basically they have deposited from different users. Because the biggest thing here is if you look at POLYCAT.finance, their TVL is actually over $200 million, which is pretty good. Anything over probably 200 to 500 million or more is a pretty established farm. A lot of these farms you'll see they're $500,000 TVL, and really those, either one, they're going to rug on you, or two, they just haven't got the exposure and they're just pretty much going to die eventually because the coin's going to go to zero, and you won't really get much from their yield. So again, check the TVL, see how many people have invested in it, and of course if it's an early project, you find it on RugDoc, then you could be at the forefront. Now, something I do want to mention is for these farms, whenever they're starting to allow farming of the token, some of these farms, they'll say APR will be 1,000,000% APR, and then it'll say farming starts in 5 days or something. You will find out the coin is maybe trading before then, but I want to caveat this: never buy the actual native token of the farm that you're farming on, okay? Because 9 times out of 10 that token is going to go to zero. So here, if you have Jupiter Finance, you can see that going on the chart here, you can see when the coin released, it was at $4.50, went all the way up to $131, and then started trading around $80 from there. Now, guaranteed bots will get this initially, so do not buy at the start. Wait for it to find support and then possibly buy some there. That is the best way to make returns with these native tokens. So you can see here it went all the way down and then it had a little green candle after that, and that was kind of your signal entry. Okay, maybe enter here at $64. It went to a high of $100, then it immediately went back down, and then look at it, it has just gone down from there and has not recovered. Now it's at 8 cents. So that goes to show, again, these native tokens will go to zero eventually. This Macho Swap token here, you can see if we go to the home page for it, its TVL is only 229,000. we go ahead and look at the token. Okay, it went, it started at $1.50, went all the way up to $58, kept going to about $80, and then again found support here at around 53, and went all the way up to 74. So again, you did have a chance to make 50% on your money, but it is risky. I will mention it is very, very risky to buy these native tokens, especially trying to find support, because sometimes you get these big red candles, and then where's your support here? Again, non-existent. And then these tokens trade for 2 cents on the dollar when they were trading for $100. So again, never buy these. One, buy these at the start, and two, if you are going to buy them, wait for these support levels and have a stop loss just in case it goes all the way down. So that's the biggest thing I can caveat. And even though they may have, you know, big APRs to start, I recommend only staking in stable coins. That's going to be your best bet, or in single pools like this for Ethereum or BTC. Again, something where you know you're going to hold for a long time anyway, but they do have deposit fees of 4% for most of these Degen farms. So just be cognizant of that, and know that, you know, most likely you'll make that deposit back, but sometimes you won't. So you have to be here at the beginning, staking these coins at the very beginning if you want any chance of getting this 4% back. If you're thinking of, you know, depositing it maybe, you know, a couple days later, you may or may not get your deposit fee back. That depends on the stability of the token. Again, POLYCAT Finance was really good in the sense that they really had a good mechanism for what they're doing. So again, they burn a lot of their tokens that they get, they buy back, they lock their tokens, so they have a good system for what they're doing. That's why they've been around for a while now, and they have so high TVL of 219 million. So you got to see what the tokenomics are, and basically making sure that they have a large, they actually have a maximum supply. So if there's no maximum supply and the coin's inflationary, then you can bet that coin's gonna go to zero. If they do have a maximum supply, and again, they're not printing it every day, you know, it's a slow printing of it, then that is pretty good, and you can bet that the coin is going to be relatively stable for the long term. Now, looking at POLYCAT Finance here, let's actually check to what it actually looks like, and then see if we can find you know, the chart for it. So one thing I'm going to do here is, again, all you have to do is go to swap. So let's just go for swap, quick swap, and then from here all I do is copy the contract address right here. See here for this fish token. If we scroll all the way back, we'll go on the 4-hour chart. That POLYCAT Finance did actually do pretty good. So it started off at $22, went down to $7, and then kind of hovered around all the way up to 27, went back down to 7, and then just took off all the way to 60. So again, from inception, this did have a good run up. Now, right now it's sitting around $13. You know, I don't know if it's going to continue down or if it will have a bounce from here. But again, this coin, you know, May 6th all the way up to May 31st. You know, anytime you would have bought this, you would have been profitable. So almost a month, and that's pretty good in the farming coins aspect. So again, you got to go to their Twitter, look at their tokenomics, and just basically see if you have the opportunity to make money from there. So that's just the biggest advice I can give y'all. Again, just going over real quick, never buy the native token, even if the high APR, because 9 times out of 10 it's going to go to zero and you're not going to make your money back. 2, never buy at the start, because again, it's going to drop and bots are going to get it at first, so you're probably going to lose money. Wait for support and possibly you know, buy off support and then make some money there. You can probably go to the lower time frames to really find support. And then 3, checking the TVL and making sure the TVL, you know, is at least, I would say, for really stable farms, you know, 200 to 500 million. Those are going to be more long-term ones. We can make money back, but it's going to take a longer time. At least have farms with a couple million, and making sure that on RugDoc they are low risk. So that's the biggest thing I can say with that. So with that, if y'all had any questions, again, please leave them in the comments below. Follow RugSteamer, you know, and then go to rugdoc.io to really find out what farms are going to be the least risk to you. And then again, let me know if you have any questions. Follow me on Twitter at the CryptoData. I really appreciate it if you do, and I have a Discord group. If you want to join that, go ahead and give me a DM on there as well. So with that, till next time, thanks for watching.